Understanding commercial insurance.
Many people aren't aware of their options or even understand the insurance they currently have. You may become eligible to change your medical insurance under certain circumstances. You may also be able to enroll in a different plan at an annual enrollment period that may be a better option for you than your current plan. Therefore, when you are working with your financial advocate at your healthcare facility and you know what your current insurance covers, ask what other options may be available to you at open enrollment. Open enrollment periods are generally available with employers toward the end of the year between October and December. They become effective the following January. Other circumstances that can affect the insurance coverage that will allow you to enroll outside of the annual enrollment period are if you're covered through a spouse and they lose coverage, or you lose your employment and you're covered through your employer. Most people get health insurance in one of three ways: through their employer, through ACA, or through government programs, which include Medicare and Medicaid. The two most common types of private insurance are health maintenance organizations, or HMOs, and preferred provider organizations, PPOs. In an HMO, you must use contracted providers within a network in order to be covered. This doctor oversees your health. Your doctor must also refer you to a specialist. Make sure they are in network so you will not be caught paying out of network costs. HMOs have the lowest patient costs for private health insurance, but also keep in mind HMOs generally limit coverage in these ways. You have fewer choices of doctors and hospitals. This means only doctors and hospitals contracted with the HMO are covered under the plan. Remember, insurance companies may make exceptions for emergencies and medical necessities. Access to a specialist requires a referral from your primary care doctor. Generally, your doctor will reach out to those referrals and get the necessary pre-certifications. PPOs. This healthcare type contracts healthcare providers to provide services at a reduced fee. Providers include doctors, hospitals, and other healthcare providers and specialists. PPOs typically have a larger pool of in-network doctors than HMOs. Most of your medical costs are covered when visiting in-network doctors. You only pay a copay. PPOs allow visits to any doctor without a referral. PPOs may provide you the ability and freedom to visit out-of-network doctors. Keep in mind, you will be required to pay a larger portion of that bill. FSAs and HSAs, flexible spending accounts, and health savings accounts are two types of special bank accounts. They can help you plan for future medical expenses, and you may also receive tax benefits. Many employers offer these types of accounts through private health insurance plans. Keep in mind that the funds that you place in an FSA, flexible spending account, will expire at the end of the enrollment period. If you don't use the funds, you will lose them. Health savings accounts. The funds you put in a health savings account do not expire. The funds you deposit in your account carry over to the next year. You can also keep these funds after you leave your job. The funds may be invested. Unfortunately, these plans are only available to high-deductible health insurance plans. In a high-deductible plan, you are responsible for 100% of cost until meeting the rather high deductible. Usually, this deductible is thousands of dollars. After you reach this amount, your insurance will pay 100% of covered medical services. You start with a new deductible every year. If you have cancer, you need to do a side-by-side comparison to make sure the plan you have is the right plan for you, based on the overall out-of-pocket cost and the kind of care you will be getting and need. COBRA, or the Consolidated Omnibus Budget Reconciliation Act, was enacted into law in 1986. COBRA is used as a gap insurance that employers are required to offer to employees after they terminate their employment, whether that is voluntarily or involuntarily, except for termination in cases of gross misconduct and loss of hours to qualify for group insurance. COBRA gives coverage for up to 18 months normally, except in certain circumstances, where it can be extended up to 29 or 36 months. From the date of the qualifying event, the employee has 60 days to make a decision to either enroll in coverage or get insurance through the marketplace. The cost of the insurance will be much higher than a premium you were paying with your employer, because you will be now picking up the entire cost of the premium and an additional 2% for administrative costs. Be aware that if you let the enrollment phase expire, you do not have the ability to go back and enroll in COBRA. The majority of bankruptcies occur as a result of medical costs, so it's important to keep insured. If you have life insurance through an employer, great, keep it. If you have a personal policy, keep it. If you need additional funds to pay for treatment, you can generally access a death benefit early. If you do not have life insurance and your spouse works, consider getting a supplemental life through your spouse's employer. Since you may have limited options for insurance, it's important to review what you have and, if needed, pick up coverage, if possible, elsewhere. Life insurance can be a huge bridge and offer income when you need it.